What's up? What's up? Welcome back here for another recap video. Today we had a couple stocks popping up: SPRC, EVAX, GETR, all stocks which I've traded. Actually, no, I don't think I traded SPRC, but today we are finishing green today, about $611. So very nice green day. The biggest green day of the year. Not my biggest green day ever, but the biggest green day of the year and the biggest green day I've had in a long time. And I feel like I really still left some money on the table. I made the bulk of my profit on EVAX. And there was one specific trade that I made about $300 on, which we can review in the live recording. Very nice trades on EVAX. It was very clean on the rally from the red to green up to $13.61. Then it started to get real choppy and had a really nasty false breakout later in the day. Other stocks that were potential is SPRC. This one was very choppy though as well. And this one's overtraded. This one's, I feel like, is real overtraded. Like, look at all of these days that were potentially in play. And it just looks real choppy. It looks real choppy. I think the cleanest day was this day here when we did clear out these previous highs and rip all the way up to 14. And since then, we started fading back down to lows, which is not good. And, continuing the chop sort of action. So SPRC, don't really like SPRC, the daily chart at least. GETR, I call this one out. During the pre-market pump. The pre-market pump is where we do a pretty quick pre-market watch list for the open. I do that live every day around 8:45 a.m. Till about the market open, and I just go through the my scanner and kind of reviewing the stocks on the watch list. GETR, I was calling this one out right before the open that we had potential for the 50-cent breakout because we had a previous top here earlier. In late last year, 50 cents. Looks like we topped out exactly at the $0.50, pulled back, and now surging back up on high volume. And so I thought we could potentially today see that break at 50 cents, and we did. And I didn't really trade it. I was really occupied with the EVAX. I did try a couple attempts on GETR on small share size, but the penny stocks are just not my strength. Definitely not my strength. Taking a lot of small losses, small gains on something like this. What got me green was catching the break back through 50 for the higher low, held the higher low, and continued surge through 50 and 51, and was able to get a nice trade from 50 up to like 52, 52 and a half. But didn't really excel too much on GETR. EVAX, though, was where I made my profits. So the specific trade I took was, I did get some green here. I was trading about 700 shares on EVAX. I can pull up the orders in a second, but just for right now, it's a lot cleaner to not have the orders up. But let's take a look. EVAX. So yeah, trading about 700 shares at the open. The reason I liked this was because during the pre-market pump, I was kind of reviewing why I liked EVAX for the open. And that was because we had this top here at 980. And I thought we could potentially see that break of 980, 982 at the open and a surge up to 10. But I did keep in mind that there was a 200 EMA at 1060 at that moment, and I thought that we could get some resistance there at 1060, which we kind of did. When we did pop up, we didn't really hold that level. We pulled back, held the low, and then finally break that 200 EMA. I can pull up this here. So it looks like, here's my daily chart, just a quick look. So about 1060, this line here is a 200 EMA on the daily chart. And that does act as significant resistance most of the time. And traders really respect that resistance level. So I did keep that in mind, but I definitely thought that we had some more room. Just even even a little bit of room just to break 10 at minimum I was looking for. I was not expecting to break all the way up to 1360, but very nice move that we did get. So yeah, I liked this because it was a low float, it had news. The daily chart was okay, it did have room, at least for the break of 10, which I liked, and we're consolidating into the open near the highs, and that's what I like. Over VWAP, consolidating near the highs, and the volume was pretty decent pre-market. So you can see the volume candles down here. So pretty decent, and that's what I liked. We can go through the recording, but I was trading the open here. I did try to attempt this here. I did avoid the rejection, the false breakout. Then we finally curled back up. I was scalping on this candle, then jumped in at 966 and held 200 shares into the halt resumption. Halt resumption, I got a very nice exit here at 11.12, 11.11, somewhere in that area. I really got lucky with that fill and was able to profit about 300 bucks on that trade, about $1.50 a share on that trade, which is very nice. Probably the best trade I've had this year so far. We pulled back and we held a low, and I was trying to catch the break out here, but I did mistime some entries and losing on the spread, and then also missing some entries as well, which we can review as well. I missed a lot of great entries there. I did start to make some back here, but I was sized way down. I don't know how I feel about it. I mean, it's okay that, you size down as the move is already, going higher. We're at this point, we're already $4 off of the previous breakout point. So, at that point, you always want to be, sizing down as the move is going higher, because, as the move is going more and more parabolic, the riskier it gets. So it definitely makes sense to, keep your biggest size on the earliest part of the move, and then slowly, size down as it gets extended. So, I can't beat myself up too much about this, but what I can do, is keep that 700 shares that I was using, or bump it up to 1,000 shares, in this area for the first part of the move, and then, start sizing instead of, down to 100 shares or 50 shares, size it down to 500 shares and then 300 shares, and then maybe in this area, 300 shares or 200 shares is fine. But, by starting with bigger share size in the beginning of the move, it gives you a little bit more of a leeway of sizing down to a degree where it's still a significant amount of shares that you're trading, even on your small size. And so that's really the mental thing that I'm working on right now with sizing up is, I want to be my biggest size. If I want to size up, I want to be in the biggest size at the most important moments in the market. So that for me is between 9:30 and 9:45. I want to be my biggest size, because I can't be trading small size where I do the best, and then like say 10:30 or 11 where my edge has significantly decreased. I can't have that part of the day be my biggest size, because mentally it just doesn't make sense. Well, it doesn't make sense from a risk reward perspective, and mentally it kind of throws you off, because now you're risking profits that you've worked for earlier in the day. So if you want to, work on sizing, you want to, for me, what I've been doing is trying to size at the part of the day that I perform the best, which is at 9:30, and then, scaling down from there. So, if I want to size up, increase the size that I start with at the open, and then fading off just at a higher, I guess it's like on a higher ratio. So, instead of being from 300 shares fading to 100 shares, it could be 3,000 shares and fading to 1,000 shares. So even on my small size, when I'm trading outside that window that I do best, it's still 1,000 shares, and I can still make some decent profits. And I wouldn't be risking too many profits, because earlier in the day I was trading with 3,000 shares theoretically, and I could be up $1,500 or $2,000 on the day. So that's kind of how I am thinking about, increasing my size. So that doesn't mean, you know, trading, you know, 500 shares here and then bumping it up to 3,000 up here, because that just doesn't make sense. You know, it doesn't make sense at this point in the chart. You know, you're at your most riskiest part. So, you know, it makes more sense to, you know, keep it big here and then slowly fade as the move goes higher. So let's just go through the recap here. All right, so at the open, so here I'm testing my one share just to make sure I'm getting good fills. Looks like the fills are pretty decent. Looks like I took a small scalp there for about 4 cents through the high. We didn't quite break out that previous pre-market high or after hours high yesterday, so you know, I still think we could still get a dip and another retest. And I think that's what we do get. So I take a couple scalps in this area. Yeah, let's just let it play here. So look, I'm waiting for a dip. I get in there 700 shares. I'm way too early on the dip there. I take about a 20-cent loss on 700 shares. Get back in at 84, back out at 905, so another 10 cents. So made back half of that stupid loss I took. Just mistimed the dip on that first part on 700 shares. Back in at 907, back out at 915. So kind of profiting off that quick bounce there. The problem with this one was that the spreads are really wide. The spreads are 20, 30 cents at times, and you could really be taking some big losses just straight on the spread. So it was important that you took your entries at the right moments. If you mistimed any sort of entries, you can be taking a 20, 30 cent loss just on the spread. So you needed to be very precise with your potential risk and potential reward. Let's see when I take my next trade. So really here I'm just looking for a consolidation and then a retest of the highs. So I either want to trade this, you know, for the breakout, or I want to be trading this off the lows. And previously I've been trying to catch dips off the lows. But I don't want to be trading in here. You know, I don't want to be trading at $9.33 or $9.25. This is no man's land. This is where the edge is pretty much 50-50. Your risk reward's 50-50. It's pretty much just a coin flip. It's a gamble. You know, this is no man's land. You either want to be trading high or you want to be trading low. Do you want to trade the dips and anticipating a support bounce, or do you want to be anticipating the breakout? But if you're just taking a range trade here, where there's no really definite direction that the price is going, you know, it's likely you're just going to catch a scratch trade, or small loss or small green, which is not really worth it. Here was also a nice dip. I didn't catch this one. I thought we would see a little bit lower, you know, maybe down to 840. At this point in the chart, it's actually kind of bearish. You know, we broke out, but now we're not holding the breakout. We're pulling back. So I was still a little bit skeptical of buying the dips here. Let's see when we get that next retest. I think it's coming up. All right, so here is the first attempt for the breakout. So you can see that the speed of the tape is picking up here. So that's always a good sign. So I get in for the anticipation of the red to green there, getting in at 22 out at 29. Looks like I was a little early. Got back in, nope, didn't get back in yet. Okay, got back in for 950. In at 42 out at 45, so still again too early. So mistime that one. Finally break out 950, get back in for after the break at 950 for the surge to the high. I'm in at 9.6 and I'm out at 9.79. So about a 20-cent trade. Only 200 shares though. Only 200 shares. So it's about let's say $1,800 position size, $1,900 position size, which is, I guess it's on the smaller end. We did get that false breakout, and I catch a nice dip here, 300 shares in at 74. So the reason I like that, because we get the rejection, I take my quick scalp for the breakout. Overall, that's a great trade. If I could do that on 1,000 shares, that's $200. So, overall, I did like that trade through the high. I'm trading either high or low. Here I was trading high, took my 20 cents, which is great. 1,000 shares, that's $200. The only thing that I would change about that is my size. We get the rejection. In this area, I don't like it unless we are holding one of these areas for longer than a few seconds, where you can kind of see that there's support either through a big bid or the tape is going through and the bid's not moving from a hidden buyer, because then you could potentially see that retest within that same candle. So then in that case, I would buy again here at 923, looking for 960, 970, which a lot of traders, scalpers like to take that trade. But if it's just going to blow right through, you want to wait for it to either base out for a few seconds, you wait for the hesitation in price, and then you get in. So right now, we're getting that false breakout. Shorts are piling in. You got to anticipate shorts are piling in on this one. Sellers are taking control. And as soon as we break that previous support, that's where shorts are going to be start taking their first profit. Because now they're up about $1 a share. You'd be stupid if you're up $1 a share not to take some profits. So that's where you can anticipate to get some demand in the short term. So I catch that quick dip there below the VWAP and below that previous support area that we bounced off of, anticipating that there'd be buyers there, either in the form of short sellers covering or longs looking to get in off of the low. So you're either trading high or low. So I traded high there. Now I'm trading low. Here I'm in at 300 shares at 72. Catch a quick bounce up to 93. So another 20 cents a share. So very happy with that trade. The only thing I would trade is change my share size. So we dipped down below again. I still think that's still a little bit extended to the downside. We just had another, just 30 seconds ago from 990, 859. I still think it's a little early. I still think that it's moving down, still in an extended fashion. So getting in there at 500 shares now, and I'm in at 55, out at 61. So pretty decent trade there. The bounce wasn't as strong as that first one, but we still did see a bounce. So overall, pretty decent trading so far. Pretty decent trading. The only thing I would change is my share size. There I took a 7-cent loss there. I was anticipating a bounce again. Here is 63 out at 62. So small losses there. I think I start to leave this alone. I still think I start to leave this alone until we do curl up again. Or I did a trade there. So yeah, that was break-even trade. I'm kind of leaving it alone because we're not getting, a resolution yet. There's in 43 out at 42. I had the right idea there off the low, but looks like I got a break-even exit. Sometimes that'll happen, especially on the larger spread stocks. Sometimes you'll have the right idea, the right trade, and the right execution. Everything will be right, but the spread, you'll just get screwed on the spread, either for a break-even or a small loss, even though it results in the right direction. And that's just the luck of the draw sometimes. Looks like I move over to GETR. We don't need to watch that. So here on EVAX, let's pull this back. All right, so we'll start here. I'm about to switch it over here to SPRC. This is gonna be a little bit longer of a recap. For those of you who are tuning in, you're gonna get a lot of value out of this. If you're still watching at this point, hit that thumbs up button. Hit that subscribe button if you're a new viewer. Hope you guys get a lot of value out of this. But yeah, here we go. Now we're curling up. And, you know, at this point, this is what we call, you know, another attempt at that red to green pattern. The first time we rejected, but now we're coming up a second time. Well, really a third time. The first time it was just like a regular old opening range false breakout. And then another red to green attempt that failed, high volume. But now we're curling back up. That's a good sign that we're still bullish, because, you know, if it was weak, you know, we wouldn't be even seeing this attempt. It would have just rejected off the highs here, off 990, and then just started to fade from there. But now that we see that we're curling back up, a lot of the times the shorts that were in here, they're going to add even more fuel to the fire than if we just had a regular breakout at the open. So this could be extra fuel to the fire that we rejected two times already, because shorts are confidence. They're in heavy, high red volume, rejection candles. Now we're closing back up near those levels on a strong green candle. That's going to definitely add more fuel to the fire. So I get in there at 40, so break even trade there. I'm trading small share size. I'm in 200 shares, so in at 42. Out at 47, trying to time this break at 950, which would be a key level, a nice psychological level. See that break at 950, I get in there at 966, so, you know, okay fill. And I'm like forcing myself to sit on my hands right now. Usually I'm taking my profits into the halt because I don't like to hold into halts, but because we're not extended really, we're not really extended yet. We're closing near the highs. It's a strong green candle. And we're potentially squeezing out, stopping out all of these short sellers that were here before. We still have yet to really squeeze them out. So right now they're in the middle of the pinch. So this is where the volume, the momentum is starting to come in. So I don't want to take it off too soon. I want to at least wait for that breakout, and at least for up to 10. I think it's, at this point, I'm like, I think we can at least see a break of 10. I would be happy. So I'm sitting on my hands, you know, this nice thick stack here on the bid. So that gives me confidence with holding into this halt. Usually I'm selling into the halt, but I'm pretty confident into this with this halt because of that strong stack of bids. So let's fast forward this, and on the exit, you can take a look here at the exit. So we resume higher, and I'm sitting tight. I'm giving it a second. I want to give it a second because a lot of times what we like to trade is that dip and the rip setup. So if I'm in already and I'm not looking to, you know, start a position here, I can still wait for the dip and then sell on the pop, and get even a better price than if I were to sell here. So I wait for that quick dip and then I sell on that pop. So it's really like it's within 2 seconds, within a second or 2 seconds. And I get a nice exit there at 11.12. So 966 to 11.12, that's about a $50 a share. My best trade of 2024. Really beautiful execution there. I don't even know if I would be able to do that again if we had that same opportunity tomorrow. I think there's a mixture between, I think the entry was definitely skill, but the exit, a lot of that was based off luck. You know, I can't control how high it's going to resume, and I also can't control my exit. So a lot of that exit strategy was by luck, but the entry is the most important anyways. Because in this strategy, it's all about timing. Here's a nice dip and rip setup here. So you got that dip. This is where you want to get in. You know, you could have got maybe 10 cents there. It's tough to say, though, because the spread, sometimes, you know, the bid price won't move up, the ask price will move up, but the bid price won't move up. So it looks like on the chart that the price is moving, but if you execute it, you'll still, you know, take the break-even trade. So there we go. I get in there at 42 and out at 55. So nice 10 cents there, or 20, what was it? Yeah, 10 cents. The reason I like this one, because we're on a dip here. You had high volume here. I think we could see, you know, just do a volatility scalp. back through 1050. We're on the lower end, and pretty much my stop is just below this candle here, or break even. So I really want to see immediate resolution and get in, and I take my profits real quick. So nice 10-cent trade there. Another entry could be another dip here. We do dip down a little bit. I want to be patient. It looks like it's hanging around these lows a little bit, so I definitely want to give it some room to see if I can catch the extended dip here, because it looks like price seems to be liking these levels. So there, I got in at 26 out of 25, so break even there, break even trade there. But whenever a price seems to be kind of hanging around these lows, I want to wait for that one more little push lower and see if it rejects, and then get in. Like here, boom, right there. Now it starts to reject, and that's where you can take your profits. So I got in there at 85 and out at 06. Got back in because the next candle, sometimes if the previous candle rejects the lows there on the dip, the next candle will open, in this case, and start to reclaim those highs of the previous candle. And in that case, I want to take my entry, and if the candle starts to go red or it doesn't immediately start to bounce, I'm out for break even. And in this case, I get in, and it immediately starts to reclaim, and that's when I can start to unwind some profit. So I got in there at 16 and out at 32. So pretty much that was just pretty much a risking break-even trade. So I literally got in at the open of that candle. The previous candle was showing that we rejected the lows. Looks like there's buyers, and the buyers are pushing this back up. So it's a pretty intricate system, and the strategy is really based off your timing. Here's another scalp that I quickly had. Let's see when I got in. So I got in for the break at 1050, out in at 43, out at 54. So that was a little bit of a tougher trade, a little bit more of a high risk trade. But this strategy really is based off how well can you time the market. It's really based off timing your entries. Can you time your entries perfectly and only risk the smallest amount possible, and then allowing your winners to run a little bit? Or sometimes you have to let your winners run, because some of these stocks are so volatile that on immediate resolution, you're up 10, 20 cents. For example, EVAX. But you definitely, on this strategy, it does work well. If you can time your entries perfectly or as best as possible, and then as it starts resolving in your favor, you're selling half, selling half, selling half, and unwinding slowly as it goes up. But the strategy is mainly based off timing, mainly based off intuition and kind of feeling the momentum in the market, feeling where price is likely to base out through level 2 price action and the tape and volume. But if you can time this strategy, if you can time your entries perfectly, if you can master the entries, most of the time the exits will take care of itself. Most of the time the exits will take care of itself. Here was another dip, but I was a little bit skeptical because the previous low, if it was strong, it would have already, went back towards the highs. But it did hold up, and this is where we start to pull away, and this is where I start to mistime my entries. So I'm trying to anticipate the break of 11 here. I can show a couple of these trades here. This is going to be a long recap, but it is what it is. So getting there, I'm trying to break of 11. I pretty much lost on the spread there. I want to get in right here. Boom, got to get in there. Would have been at 15 cents on the bid. Pulling back again. And now we're pulling way back. So this is where, I kind of want to maybe, I don't know, is it going to reject the highs? This is where I start to be a little bit, a little bit patient. See what it's going to do. You know, this could be a dip buy. However, you know, if it is a double top, you can be taking a pretty nasty loss there. So starts now we start to look like we're reclaiming some of this candle. And since prices are kind of hesitating here, like we didn't immediately flip to a red candle and flush all the way down to 970s or $10, you could have actually gotten in here at 1070, risking the low of this candle and see if we reclaim the wick. That would have been a good trade. All because it was holding the lows here, it was hesitating, it was hanging around the lows here, and wasn't rejecting. You know, if it was a double top short setup, you know, this thing would have just came all the way down to $9, $10, $9.80, $9.50, $9.25. But because we were hanging around these lows for quite a bit of time, you know, it could get long there, and now you'd be up 20, 30 cents, 40 cents. Here I get back in for the break of the high and in at 03, out at 93. So pretty much, again, lost on that spread. So pretty much missed timing here. The next entry here would be the break of 11. Break back over 11. Need to get back in at right now. Boom. And ride that up for the breakout. And I didn't. That could have been a nice 40-cent trade right there. Ugh. But you can't catch every setup. I think a mixture of just mistiming some of these entries kind of now got me into a fearful mindset of I don't want to give back too much profits. And that's where it starts to I start to dial it down. But we do halt up. We're chasing the halt levels at least. Here is another dip. Off the low at 62, out at 62. On this dip was tricky because we were extended. There was definitely some risk on it, but we're holding 1150 strong. There's 4,000 shares at 1150, and we didn't break down. So I got in there at 64, out at 84. So pretty much profit on the spread there. I got a really lucky exit. I was really looking for a breakdown between 1150 to see what it would do. You know, are we going to close lower and continue lower, or if we're just going to reclaim 1150 quick? And if we do, then I could add into that. But we never broke 1150, and we just started ripping right back to the highs. There wasn't even that many buyers there at 1150. I don't see a big bid or anything. Here's 1,000 shares at 1170. Which isn't that big. But now we start to break through 12. Let's see if do I get in for the break at 12? I trade, yeah, now look at me, I'm sizing down to 50 shares. What am I doing? So I get back in here at 12.18, out at 23, 5 cents. Get back in at 12.26, out at 48. So another 20-cent trade. So, you know, I had some really decent trades in here. You know, a lot of 10-cent winners, a lot of 20-cent winners. I had a $1.50 winner. Overall, pretty good with performance-wise. The only thing I would change is my share size. You know, if I could just push a little bit more shares on something like this, you know, it could have definitely been that 1K day. Could have definitely been the 1K day. Finishing up 611, so I really can't complain. Don't want to beat up myself too much. This was a risky stock. You know, you definitely had to be very precise with your entries, because if you were mistiming your entries like I was in this area, you were taking 10-cent losses back to back to back to back. You know, if I'm trading 1,000 shares on something like that, I take I mistime my entries like 3 times in a row. That's $300 right there. That's half my gains I would just give back. So, you know, on the one hand, it's good that I kind of kept it tight. You know, in hindsight, it's easier to say hindsight, oh, wow, if I would have done this, I would have been up so much. But you never really know. You know, those couple trades in this area, if I was trading 1,000 shares, you know, I could be down 300 off my highs, and then now chasing it higher and then getting dumped on, and giving back profits because I'm emotionally triggered. So it's good that I'm kind of being mindful of the type of action that I excel at. This isn't exactly, the large spread stocks are not exactly the types of trades that I excel at. But for me to be able to pull out $600, I'm happy with that for sure. And who knows, maybe I will be more accustomed to trading larger spread stocks, larger price stocks, between 10 and 13 bucks, 10 and 15 bucks. That this could be my new kind of bread and butter type of price action, and I can size up from there. So I can't beat myself up. Just gotta review all the good trades that I had today, and when the next stock like this comes around, I have now experience under my belt, and I can push it even harder. So that's it. Thank you guys for tuning in for this recap. I know it was a long one, but I hope you guys got some value out of this. So I'll catch you guys tomorrow in the pre-market pump at 8:45 a.m. Eastern time to review tomorrow's watch list. Hopefully we get something nice like we did today on EVAX. And with that, hope you guys hit that like button and subscribe if you're new, and I'll catch you guys later. Peace.